So rule 1 and 2 can be found in pretty much the same sentence of the clause C2 of RBI's credit card and debit card issuance directions 2025, right? We've highlighted it here. It says the MITC and copy of agreement must be digitally signed, right? The MITC and copy of the agreement signed/digitally signed between the card issuer and card holder, so on and so forth, right? Second part, rule 2, between the card holder and card issuer, which is rule 2 that we mentioned, right? So it must be digitally signed between card holder and card issuer, rule 1 and 2. Digitally signed, both parties must sign. And obviously, this has to be sent via email or postal address if you're doing physical, postal address if you're doing digital via email. But this flow, I think you already have built. Most credit card companies do send it via email. So let's go one by one. Two rules here, right? Rule 1, digitally sign, right? It's crystal clear under law, right? So Section 5 of the Information Technology Act states that when a law or regulation states explicitly uses the word sign or digitally sign, then if you want to accomplish this process digitally, you can only use an IT Act electronic signature. You cannot use any other electronic authentication method, right? And IT Act eSigns are a very specific set of signatures, right? Aadhaar eSign of any type, one, PAN eSign, DSC token, those USB devices that we're all familiar with, and doc signer. There are no other types of eSign available. There is a kind of a fifth one, a niche one used in some cases, I think for eNash, if I'm not wrong, where via KYC you can also do a sign. That's not very common for retail document flows. But basically the point is that eSign is confined to these specifically mentioned types of sign, right? You definitely cannot use clickwrap, right? Which is a form of I accept, yes or no box, or you cannot use a virtual scribble signature if you're doing it digitally. But a lot of issuers in the phygital process we talked about earlier, or even in the app-based process, do use clickwrap. Usually an I accept with a line at the bottom which says, hey, this is like a signature that you're affixing on the agreement. But as we mentioned, RBI's rules explicitly prevent this. They want a digital signature. So that's rule 1, digitally sign, right? Meaning an IT Act eSign, which is basically 4 types of eSign, no other type permitted. Now coming to the second rule, between the card issuer and card holder, right? So in many cases, there is no bank sign on the MITC at all. It's usually some virtual scribble at best. Sometimes there's no signature at all. And what we said is that ultimately you have to use one of the 4 types of eSigns. But let's be practical here. Not all of these 4 types are usable. So in this section, I'll give you a guide on how to choose the type of eSign for this process, right? So one, DSC tokens, the third thing mentioned here, are very hard to use. They keep failing. Most of your customers don't have one. Even the customers that do have one usually do not keep them on person. It's probably with their chartered accountant or secretary. So while DSC is technically valid, there is no way it's going to be a convenient process for your customer, right? It's not viable at all. PAN eSign is also similar. It's very hard to actually obtain a PAN eSign and actually affix a PAN eSign. So even that is not viable. And doc signer, the fourth one, is a purely automated signature. So it's not possible for the card holder. It's issued to an organization and is automated. So for your card holder, your customer, the only viable eSign type is an Aadhaar eSign. And usually in the industry, credit card industry, this is via OTP. If you want to do something like, let's say, a Kisan credit card at the branch, or you want to do an issuing drive where you want it to be signed then and there, you can also use a biometric or a face authentication, right? But usually what we've seen is Aadhaar OTP is the preferred method, except for Kisan credit card where actually biometric is preferred because it's done at the branch. For the card issuer, on the other hand, Aadhaar eSign is very impractical, right? Because your signatory is not going to sit and do one Aadhaar eSign every few minutes for every application that comes in. Same with DSC and PAN, right? Aadhaar eSign, DSC, PAN, they are basically eSigns. You can do one eSign per transaction that you do. Instead, doc signer, which we said you can't use for card holder because it's automatic, can be used here. It's great here, right? Because it is a company sign issued to your company. It's an automated sign. So it gets automatically affixed after the card holder has signed. There is no manual involvement needed of your authorized signatory. right? It's a sign you can just, as a matter of process, keep getting affixed on your credit card MITC and agreements. So this is a very popular eSign type already in digital lending flows, where RBI's digital lending directions also mention that the loan kit sent to the customer must be digitally signed. So that's rule 2, right? Rule 1, IT Act eSign. Rule 2, for card holder, use Aadhaar eSign if you want to be practical about it, and Doc Signer for the card issuer, right? So that's rule 1 and 2.